Welcome to The Informed Investor, where we break down the latest financial headlines, bringing in research and insights to help you separate the news from the noise.
Welcome to The Informed Investor. I'm Mark Gochner. I'll be joined today by Jake DeKinder. And in honor of Thanksgiving, today we are going to talk about things that we are thankful for when it comes to our investments and when it comes to markets. Jake, you ready to go?
I'm always ready to go.
All right, Thanksgiving, it's such a special time, great time
Really
with
is.
family. It's kind of a downtime, a chance to relax and be together, watch a little bit of football, things like that. So
Mhm.
we both are very blessed, obviously tremendous spouses, family, healthy, happy family, kids, so a lot to be thankful for there. But we're going to pivot a little bit into markets and investing here today. Do you want me to start with what I'm thankful for?
I would love
Or
if
do you want to start?
I would love if you would start.
All right, I'll start. I'm going to start out being thankful for, I'm just going to use the word markets.
Okay.
This idea
Okay.
of markets coming together, whether it's stocks, bonds, maybe other investments, different types of exchanges, where you have willing buyers and sellers coming together to agree on a price. And we talk about like markets is this incredible information processing machine where all known information is being priced in. And what I'm thankful about that is, as an investor, it takes away so much stress and anxiety with what's going on. And what I mean by that is whatever I'm worried about, it's already reflected in prices. Whatever I'm excited about or optimistic about when it comes to my money and my investing, it's already reflected in prices. So it just takes the stress away of day-to-day investing for me.
I think that's great. I'm going to pick up on that and say I'm thankful for the evolution of markets over time. A couple of months ago, we were up in New York outside the exchange. We had the tour at the exchange, but remember what they were talking about?
The New York Stock Exchange.
The New York Stock Exchange and all of the merchants coming together underneath the Buttonwood tree, where they used to
Right.
basically trade contracts. And that really was the heart of sort of the first financial markets here in the US. And you go from that to where it was a limited number of buyers and sellers. Maybe they had more information to where we're at today and all of the trading volume you're talking about and the millions of buyers and sellers that come together every single day to represent their view of markets. And I'll relate it to that of I'm thankful for high trading volume. Sometimes we get these periods where a lot of news comes out, maybe it's negative news, maybe volatility spikes and people get a little bit concerned. But a lot of times what you see during that period is you see really, really high trading volumes. And as an investor, I take a lot of comfort in that. Volatility can be tough to go through, but when you see no matter what's going on, everybody gets to express their opinion and those buyers and sellers keep coming together, maybe even at a higher rate or there's a lot of volume. I'm thankful for that.
Yeah, it's an incredibly efficient way for people to
Completely.
express their views,
Yep.
positive or negative, whatever it might be.
Yeah.
Yep. So that's a great example there.
Yeah.
And it gets to as well. I'm going to go back to maybe the evolution of finance, even
Mhm.
kind of what got this place here with these exchanges, continuing on what you're talking about with the New York Stock Exchange, when we started to get data and we could start understanding the data about these company returns. And it really led to sort of the evolution of finance. You go back to the 60s and some of the key academics that contributed to where we are today. So maybe walk us through some of those that jump out to you over that time.
Well, let's go back. Let's go back to Markowitz. I think a lot of it really can start there. And then we start to move in some stuff. To your point, as we get into the 60s, computers come on the scene. We can start talking about Merton Miller. We can start talking about Gene Fama. We can talk about Bob Merton. We can talk about Myron Scholes. You just really start to go down the list. And the cool thing about that is that's really when finance starts to become more of a science. It's not a guessing game. It's not an opinion. To your point, we get to the 60s. We get the CRISP database established at University of Chicago, Center for Research and Security Prices. Now we can actually look at this stock market data and stock returns, and we can actually glean insight of what we should know as an investor to improve the way that we approach markets.
I like the way you mentioned that science. And we start the show oftentimes saying, hey, we are here to bring financial science to investing when we're
Mhm.
talking about what Dimensional is trying to accomplish with all of our clients. And by the way, we created a film around that, sort of this evolution
Yeah.
of finance you were just talking about. Tune out the noise. I would encourage any of the listeners out there and even to send it on to their family members. They're just kind of curious about how markets developed. Tune out the noise, go to YouTube, Dimensional site. You can watch it there. So I'd encourage everyone because you'll learn a lot about markets.
People take away some really cool insights that I think almost improves their confidence as an investor because you become more knowledgeable about what's the history, how do markets work, and what do I need to think about as an investor to have that good investment experience. And that's one other thing too I'm super thankful for. I do feel like investors today either have a greater desire to know more about investing, to get better educated. There's more information that's out there. So I'm really thankful for the way that we've sort of evolved, I'll say, as investors as a whole, to where it's not just there's the broker and somebody who has the information and you feel like you're an outsider. David Booth says this all the time, that a lot of people feel like they're an outsider with investing. And I think we're breaking down those walls a little bit to where you don't have to feel like the outsider.
The comfort, the confidence in
Yeah.
investing, as you mentioned there.
Yeah.
All right, so go back in time and you think about investing. It involved probably buying a couple stocks. Usually you had a broker. There was a high cost to go buy stocks. Usually you had to pay a commission
Mhm.
to the broker, and all that has just come down and come down and come down in time. And think about where we are today as an investor. Another thing I'm thankful for is, as an investor, we can go out there, we can make one trade, one buy in a mutual fund or an ETF. We can get exposure to, in a globally diversified fashion, 12,000 stocks all around the world, probably 44, 45 countries, at an incredibly low cost. Like where we are today and the quality of investment experience we're getting, it really is unbelievable. I'm tremendously thankful for that.
I think you should be thankful for that. I mean, shoot, I think about that in terms of my retirement account, my kids, all the people that we interact with. And it's a great point. I mean, imagine 30 or 40 years ago trying to do that. It would have been a lot more challenging. And there's a high likelihood it would have been a lot more expensive as well. I mean, we're really at a great point. And I think a lot of investors should really take advantage of that. And again, educate themselves on how easily, especially compared to the way it used to be, you can really access this global economy.
It's a great time to be a global investor,
It really is.
isn't it?
Yeah.
Now, what that gets you as well is when you are a globally diversified investor and you're capturing those returns over time, and we like to say returns you're entitled to,
Hmm.
capital market returns
Mhm.
you're entitled to as an investor. That's the value of compounding that kicks in, right? Sometimes it's called the eighth wonder of the world.
Mhm.
It just generates wealth over time, particularly in the later years, sort of that hockey stick effect. So if you have, I guess, the belief in markets, the belief in capitalism that it will make you money over time, going back to a line that Tim Slattery used. In fact, he was just on the
Right.
last 2
Great
weeks,
episode.
right,
Great
with Mike
episode.
Mers and
Yep.
Tim Slattery. Just a great line there that markets will generate that wealth for you over time, and that's the value of compounding as well. You just got to be in the market though to get those returns.
It relates too. I mean, think about just sort of your everyday life as well. You make these decisions as you go through time, you study hard, you work hard, you put your time in. You mentioned that idea of a hockey stick. And I think for a lot of people, when they have long careers as well, a lot of the success starts to come maybe in their mid 40s, late 40s, into their 50s. And it's because you put all the time in, and it's the power of compounding with all those little decisions. And it's the same thing with investing. You save early, you put the money to work, you keep your costs down, you stay diversified, you don't bail out when markets get a little bit choppy. And then the next thing you know is you look at your 401k, or you look at your retirement account, or you look at your sort of total net worth, and it's almost mind blowing of what that hockey stick can look like. It's tremendous potential.
Yeah, and I'm gonna give a little plug to those prior 2 episodes with, again, Mike Mers and Tim Slattery. They just do a great job of saying, hey, as an investor, here are the things you got to get right.
Mm-hmm.
Here are the things you want to make sure you avoid
Mm-hmm.
when some of the stuff that may come your way. The other thing too that incredibly thankful for, you're talking about making good investment decisions. And how do we make good investment decisions? We go get the right kind of help and professional help. So kind of walk us through the value of having an advisor along that path.
Well, think about where financial advice is today. I mean, again, if we go back, we're sort of doing a little history lesson here, but you had a broker, and they basically provided access to the markets. And let's be real clear, that was a valuable service, because otherwise it was really tough to figure out, how the heck do I even buy a stock? How do I buy a mutual fund? How do I do any of this stuff, right? So you sort of get this access to the market, and then you get the idea of a little bit more well-rounded asset allocation. It's maybe not just an individual stock or an individual fund. How do these things actually go together in a complete package? And then you start to evolve into, I'll say, more holistic wealth management, where the investment piece is a huge part of it, but you start to have conversations about the financial planning and the estate planning, and how does tax come into it, and risk management and cash flow management and all of that. So you're at a point now where you really have, I'll say, tremendous opportunities around the sort of holistic advice space. The other thing that you've seen in the industry and the evolution is, you go from maybe somebody who is providing that access, but it may not be the best decision or the best thing for the end investor, to where in the late 80s, early 90s, we get the idea of an independent, fee only fiduciary that
Mhm.
starts to come on the scene. And I think all of those things have continued to evolve to where you really do have that person who can sit on the same side of the table with you, look out for your best interests, understand everything in your life. And we know that good, sound financial advice can make a massive, massive difference in people's lives.
Massive difference. And you highlighted all those different areas of somebody's, I'll say, financial
Yeah.
life. You got to get the right decision made in each one of those areas. So
Mhm.
that advice that these financial professionals bring is, in many cases, invaluable.
Well, I
for
think
it.
also too, one of the things that we hear is like, well, that advisor is going to charge me X for a cost, right? I mean, really push yourself on that of what's that worth to you? Because there's a lot of elements in your life where I think you pay a service provider, whether it's somebody who is taking care of your yard, whether it's somebody who is cleaning your house, is, taking care of your kids. And by the way, I'm not making comparable. I'm not saying like kids and financial advice and lawn service are the exact same thing, but the concept is interesting that I do hear sometimes some of that pushback on, well, it's going to cost me this. Really think through the value that they're going to add. And I think more often than not, you're going to say, man, that's probably worth it.
Yeah. And you can run the gamut, doctors, mechanics.
Completely.
Like everybody has
Completely.
value there. And,
Yeah.
and there's a fee appropriate for that.
And there's a fee
That service,
appropriate
yeah.
for that. Yeah.
One other thing, too, you kind of go back in time. I'm going to bring up some things I'm thankful for from a journalistic perspective. And, most of the time, I guess almost every time, we start this show with some headlines. We didn't today, but I want to go back to some of the headlines because I want to highlight a couple journalists out there that I feel that really have made a significant impact in the right way for investors over time. We talk a lot about headlines somehow kind of jarring your emotions
Mm-hmm.
when it comes to investing. But I feel a couple of these gentlemen I want to highlight have done such good for investors. And the first one I want to highlight is Jonathan Clemens. When I started Dimensional back in 1998, those were articles every week that I was reading,
Mhm.
just a personal finance columnist. And he was really advocating, particularly at that time, again, when it was high commission, high cost products. He was like, you really got to focus on as an investor, low fees, diversification, transparency around what you're getting into. And unfortunately, he passed just September of 2025. But I think
Mhm.
what he did for investors was absolutely fantastic. Another one I want to highlight is Jason Zweig, who
Mhm.
actually did a really nice piece on Jonathan when he passed away. And of course, Jason Zweig is also a journalist at the Wall Street Journal. And
Mhm.
I think he's the author of The Intelligent Investor is his piece. But again, I think he's done an incredible job in advocating for investors out there. A little bit of a tone I take from reading his articles is more around awareness around the cost structure of different investments you might be getting into, proper expectations around markets. If it sounds too good to be true, it's probably too good to be true. Just really deep dive into what you're getting into because it's not always going to be obvious some of the costs or risks that are associated with what a lot of products are being sold out there.
I think those two authors that you're highlighting are interesting in that a lot of people may not know them and may not have read their pieces. And I think it's probably one of those that it's not maybe the most exciting stuff. Every single, does it make the front headlines, right? We know, we sort of know the way that you sell magazines, you sell newspapers, you get clicks, you get people, you got to almost sensationalize it and you got to make predictions and you got to say these things. And you mentioned the title of the movie, Tune Out the Noise. And I think that's really what you're talking about there is as an investor, how do you cut through a lot of the clutter when it comes to financial media and find a few people that are out there that are really, I'll say, providing really sound ideas that may seem almost a little boring or maybe not quite as sexy, not as headline grabbing.
Mhm.
But if you read them week after week, month after month, and you really internalize a lot of the things that they're saying, it's everything that we talk about on this show. And again, it may not be the most exciting stuff, but it's like eating your vegetables, and getting some sleep and having a workout, right? People are like, well, it's a little bit boring. Be like, yeah, but it gives you the best chance of success.
Well, and confidence,
And
that
confidence,
you're on
yeah.
the right path there
Yeah.
in the decisions you're making. I'm going to give you another one here. So I was talking to Betsy, my wife, and
Yeah.
I was talking about the topic of
Yeah.
this particular episode. And I said, Betsy, what are you thankful for when it comes to your investments? And she's like, I'm thankful that they're safe.
What you mean by safe?
And that's what I thought. I go, well, what do you mean there? Because, market prices and,
Yeah.
go up and down considerably. And she goes, when I'm talking about safe, what I mean is I can go and look up our account, at the respective custodian.
Mhm.
I can look up our account and it's there. I see how much we have and I can get a report at any time I want to look at it. And that feels safe to me, that I'm not in some Ponzi scheme where I don't know where it is. I don't know what I'm invested in. And somehow I'm getting taken advantage of. So she highlighted that's what safe means to her. And I said, what else? And she said, the other part of safe to me is that we're diversified and I'm not taking a risk as an investor, like in one stock or one sort of investment. And this is bad on me, but she goes, when we first got married, pre-dimensional days.
Are you going to share some information here, Gothner?
It's G-rated all the way. But I did, and this, I got into a very early version of day trading. Again, prior to Life Dimensional, I played stock options. I did all this stuff. And she goes, when you're doing that, we were losing money. We were stressed out. And when you started Dimensional, all that went away. And now I've always felt good about our investments. And so she goes, that's the other part of safe is we're in a diversified, minimizing the risks we take in just doing crazy stuff that I did there. And I said, by the way, when she was talking about, being able to go to the custodian and see the account, I said, did you see our episode we did on investor safety? And she's like, no, I haven't been watching the show lately.
You don't want to say that on the show,
like,
man.
on,
she normally
honey,
watches our webcast, at least.
At least my son and daughter watch it.
Oh, that's good.
So that's good.
Hey, it's interesting you mentioned that. I feel like if you talk to a lot of financial professionals, you talk to a lot of people around Dimensional, I feel a lot of us have those stories, like the day trading, the single stock. Do you think investors maybe at some point have to go through just a little bit of that to come over to the other side?
I think most do.
You think most do?
Absolutely. And I think why is, again, we're all taught, most of us are taught investing is, again, you got to time the market. You got to pick that hot stock. I was just getting my haircut last week.
Yep.
And the guy goes, hey, what do you think of NVIDIA? I'm like, well, it's done really well lately. I know that. He's like, well, I just got me a couple shares. So but again, that's what he's been taught about investing is you got to pick the winners, time the market, stuff like that. So I think you have to go through some, unfortunately, tough experiences to probably learn or have the search for a better way to investing. And again, that's what the show's about, to try to help people through that to where they don't have to go through the ringer, if you will, to have a great investment experience.
Well, and you also hope that if somebody has to go through that, maybe they go through it a little bit earlier in life where the absolute impact on the wealth is a little bit less. Because certainly if you've accumulated the wealth and then you play that game, 50s and 60s, I mean, that can be a major life-changing event. So I love what you said there. I mean, I'm thankful. I'm thankful for this show. I'm thankful that I work at Dimensional. I'm thankful that we're around all these ideas every single day and that we get the opportunity to go out and tell people about it because we're incredibly passionate about it. I mean, we live and breathe this stuff every single day.
Yeah, well said. We're blessed to be able to talk about this constantly in what we do here. Now, you just mentioned playing the game. That's going to be the next episode. We're going to talk about sports betting, this idea of what's the line for any sports game out there and how is that line set? And we're going to compare and contrast that to how markets work on a daily basis as well. So thank you for joining the Informed Investor. Have a wonderful time with your family and friends over Thanksgiving. Be safe, and we will see you next week on Informed Investor. Thanks, everybody.